Joining me now is Robert Wares. He's the chairman and CEO of Osisko Metals and the co-founder of the original Osisko Mining. Now let's talk about Osisko Mining because the company just struck this really a milestone agreement with Gold Fields, a 50-50 joint venture to finance the Windfall project. So what's the significance of pushing this deal across the finish line?
Well, it really is a milestone. Mine financing obviously has become difficult for junior developers. And so bringing in a highly reputable and reliable partner into the deal to lead the mine build is a fantastic opportunity and deal for Osisko Mining and the shareholders. With Osisko Mining now basically has free carry with additional cash in the bank to carry on also with property-wide exploration on the entire Urban Berry package. And it's going to be a very exciting year and several years to come, actually. A total of $75 million in exploration is going to be fully financed by Gold Fields to explore the package, and we certainly believe there's a fantastic potential to find more windfalls.
Yeah, the company has said that Windfall itself has world-class scale and grade, robust economics, top 10 globally, basically. So can you just give us an overview of it and the potential to expand it and the potential size of it?
Well, the current resource is actually based on all of the 2 million meters of drilling that were done up to a depth of about 1,200 meters. And a few holes went deeper, the deepest gold intersection being at a vertical depth of 2.8 kilometers. So that's actually very significant because that tells us that the vein system continues for another 1,600 meters down plunge to the northeast. So that's basically offers potential to eventually, over the life of mine, to double the resource. So this is going to be, without any doubt, a very long-lived operation, mining underground, very, very high-grade veins. Keep in mind that the grade right now is as a result of a lot of statistical capping, and all the bulk samples so far have indicated significantly higher grades, up to 30% higher than predicted from the block model. So ultimately, the grade is going to be better than what it is now in the feasibility, and it's going to be a fantastic operation. I can tell you from my point of view, watching the project develop over the last 7 years, is that I've never seen so much visible gold, just museum grade samples, just gobs of gold.
That's saying a lot.
Oh, it is. It reminds me of Larder Lake and Kirkland Lake Camp. It's just a fantastic deposit. It's just amazing.
Okay, so having said that, we know gold's near a record high. Gold sector is perked up. So you're sitting on about a $1.3 billion market cap, lots of analyst coverage. Is the market fairly valuing Osisko Mining right now, do you think, or are they still underestimating the story?
No, it's, we think it's, of course, underestimated. After the announcement, the share price dropped. To us, that was clear. Those were the short sellers bailing. They were hoping for news not on a JV, but on a takeout, and sniffing for a premium. So when they saw the news of the JV, they just left. So now shareholders, especially funds, longer-term funds, are going to step in. It's going to take a while before they recognize the full value of the deal, so that involves a lot of marketing, of course. So we believe there's ample room for appreciation in share price. And right now, analyst consensus post-announcement is between $5.50 and $6. So there's a lot of room for improvement.
Let's move along to Osisko Metals. You've got two projects, the past producing, the copper mine in Murdochville, and also Northwest Territories Pine Point, zinc lead. And so, and the copper mine is Gaspé Copper. So just a quick run through of those two assets.
So both brownfield sites, both iconic past Canadian producers with significant resource that were left in place back in the day when base metal prices were beyond dismal. And of course, in the current environment with increasing base metal prices, these assets have become interesting. So in a nutshell, Pine Point Mostly in inferred category, we have about 8 billion pounds pit constrained in the ground, shallow resources. It would be a very similar operation to what Caminco did back in the 60s. And at Gaspé Copper, we're looking about 3 billion pounds, again, of copper pit constrained at the Mount Copper site, which would essentially be an expansion of the old pit. So that's over 11 billion pounds of metals in the ground, and we feel confident at least 85-90% of those will end up in the reserve category eventually with the feasibility. So very significant resources, and still early stage for the market. But again, what we're seeing in the lithium space right now, very bullish outlook. I think the same thing is going to happen in the base or the critical metal space, because these metals are critical to the energy transition. And I think we're heading for shortages, and it's coming fast.
Right, and we've all seen those charts going out to 2030 and
Yeah.
longer beyond that. And then speaking of joint ventures, you have one here with Appian Way Natural Resources Fund,
Yep.
where they're spending as much as $100 million to own eventually 60%.
Correct.
So what's the thinking there?
Well, again, we weren't going to raise, it would have been far too dilutive to try to raise $100 million in equity. So bringing a partner, again, was the solution. So now we are free carried with cash in the bank to invest in Gaspé Copper. We're free carried to production at Point. We expect to get there over the next 4 years.
And then with Gaspé Copper, you're heading towards a preliminary economic assessment, and you call it the largest undeveloped copper resource in eastern North America. Yeah?
It's not saying much because there aren't any others.
Okay, all right. Well,
I mean, Quebec used to be a significant copper producer way back in the 50s, and now Quebec essentially produces no significant copper. So it's not because there isn't potential for copper. It's just that, again, it's a metal that's been neglected. So Gaspé Copper, I worked there along with Jeff Hussey back in the 90s. We're very familiar with the geology of the system. We knew there was a copper left. Gaspé Copper closed down in 1998, not for lack of copper. It was simply, economics. Copper was at 80 cents, going nowhere, and Noranda decided to shut it down at the time. So there's actually more copper still left on site at Gaspé Copper than the entire 45 years of production since 1952. So it's not negligible. By global standards, it's a tier 2 asset, but at this point, we'd rather have a tier 2 copper asset in a very safe jurisdiction than a tier 1 asset in a jurisdiction that's either going to get nationalized or it'll be impossible to permit. And so for us, it's a significant acquisition. We hope to close with Glencore by the end of June or earlier. It's in the hands of the Quebec government right now to cover the environmental bonding and the transfer permits. And with that, we're going to start a new drill program this June, the second phase drill program.
very good. And lastly, Robert, what would you say is the overall investment case for Osisko Metals? Is it the asset management, sector tailwinds, essentially?
Well, obviously, the assets we feel are very significant. We've got a proven track record in terms of management. It's still early stage by a development stage, but it's a bet on base metals. We're very bullish, and those investors who believe, obviously, in decarbonizing the economy. You can't believe in decarbonization of the global economy without believing in metals such as zinc and copper. They're essential. So it's a bet on the future of base or critical metals, and that's where the value creation is going to occur also as we de-risk the project and approach production in both cases.
Thanks for your time today, Robert. We'll see you again.
Thank you very much.
Okay.
Pleasure to be here.
Robert Ware is Chairman, CEO of Osisko Metals.